Good evening, everyone. My name is Paul. I'm just going to walk you through the employment stats for May 2016 to kind of give you an overflow of what's happening in terms of job creation in Canada. Now, my perspective is only one perspective. You're more than welcome to go to the bank sites, RBC, TD, Scotiabank, you name it, to take a look, as well as Stats Canada to get more understanding of the numbers. I'm going to come at a high level view and just look at the various sectors and give you some underlying factors which may drive it. A little brief bio about myself. I'm a CPA CGI by trade. I've got 25 years of experience in academia, industry, and financial solutions. My agenda will be, I'll talk about the summary, I'll talk about employment by sector, I'll get into private versus public sector, and I'll talk about provincial summaries. I'll talk very quickly on this slide. You can see the slide itself because it gets into specific trends. What I'm going to say to you, typically when you look at employment numbers, you can't look at 1 month. What you have to do is a trend over a period of time, and you have to align that trend, what's going on economic growth and what's going on in terms of retail spending, whether is it growing. You also have to look at housing starts, so you have to look at these numbers overlaid to other sectors, but you have to look at it at a period of time, not just 1 month. Here's what I want to focus on quickly. So since November, we've created about 70,000 jobs. Okay, that's roughly about, if we go on a period and say it's 6 months, it's roughly about 10,000 jobs a month. But what's concerning here is where the jobs have been bled. We've bled basically close to 80,000 jobs in manufacturing and the resource sector. What's that mean? Well, we've got certain sectors that are just not that strong. We know that with energy in the mining sector, and we've seen that. But we also know that certain sectors like food processing, forestry, and automotive production are basically carrying the economy. And we've seen that when we looked at the export trade stats and we've looked at manufacturing trends. That's what we see. But we're still seeing in the good producing area a lot of turbulence. Okay, so that's key because goods producing drives trade. It drives manufacturing sales and drives good employment, and we're not seeing that right now. Now let's peel back and look at the service sector. We've created over 105,000 service jobs. But look at the retail trade since November. We're flat, yet retail sales are up. You know, we had a strong first quarter. We're still seeing likely growth in retail sales from anywhere from 1.8% to 2.5% this year. 2/3 of the economy are driven by retail sales, yet we're not seeing in employment numbers. What's possibly maybe driving that? Possible more and more e-commerce has come into play. More and more companies have learned to deal with less, and therefore they're not on a big binge to hire. Where are we seeing job creation? Well, since January, we've seen 70,000 new public sector jobs created. That's something to bear in mind when I get into the next few slides, and I'll discuss them at more details. Is it all doom and gloom? No. But are we going through a period of strong economic growth? No. Both globally and in Canada, we're not. So despite the change in government, we are through periods of economic slow growth driven by commodity prices as well as slow worldwide growth in countries like China. Brazil's in a recession. We're seeing that. So when you take the employment numbers, you have to overlay it, not just domestically, but internationally, what's happening. And that's what I tried to do with these stats. You can't talk about employment unless you talk about private versus public sector. We have seen this year, since January, 70,000 more public sector jobs. And what does that mean? As a taxpayer that works in the private sector, you're funding those jobs. And what you see on the right hand side, now this stat's a little old, but it's still relevant. In general, public sector jobs pay about 10% more than the private sector. Now, if you take that out and look at union, it's about probably 6%. Now, total government spending in Canada, roughly, if you exclude debts, $588 billion. 50 cents of each dollar that the government spends goes to compensation. So if they were to pay for the same amount of labor at the same rate and we were not having a premium, you would see about $18 billion less in compensation. Look at how that $18 billion could be spent. It could be spent on roads. It could be spent on healthcare. It could be spent on education, frontline services. So that's something to bear in mind. Adding more government jobs makes whether or not that government's sustainable. Sustainable is critical because at some point You can't keep taxing. You have to make cuts, and that's what you need to watch with these trends. Regional analysis is very quick here. Ontario, Quebec, and Nova Scotia have seen the furthest growth. Now, Ontario and Quebec, a lot of that's been led by the manufacturing sector, where we basically have bled jobs out west. We picked up some of that slack in Ontario. Now, not all of it's manufacturing. We're seeing other aspects of the public sector in Ontario. Construction is very strong in Ontario. So that's keep in mind. In Quebec's case, forestry has done reasonably well, and so is food processing area, and that's to bear in mind. And Nova Scotia is done well because the exports of goods, especially seafood and agricultural products, part of the trade agreements, they're benefiting from that, and that's led to stronger employment gains. So what's this mean in a nutshell? As the RBC said, the Bank of Canada is in no hurry to raise rates because inflation's not bad. We don't have strong job numbers, and we don't have a strong economy, so at this point they don't plan to raise. But it's deeper than that. We have people with huge consumer debt, household debt. If the government or the banks are to raise interest rates, that could push people over the edge and make things worse. So what's going to happen here going forward as we move forward to the rest of the year? We're likely going to see slow growth. We likely will see negative growth in this quarter for the second quarter this year due to what's happening in Alberta. The rest of the year we'll likely see it'll pick up, but it could average growth about 1.6%. I hardly call that strong growth. Strong growth means is we're not likely to see huge job creation numbers this year. Now, what may end up happening to stimulate that is as the money flows through from the federal government, we may see that impact in the overall results. But the verdict's out yet to measure that in terms of its stimulus in the economy, because the facts aren't there, because the money hasn't flowed, and we're not seeing that indication yet. Are we seeing infrastructure money spent? Yes, but that money was already committed as part of the initial funding from the gas tax and the Build Canada funds, as well as other municipalities and provinces already committed their capital plans, so that money's already flowing there. So that's something to watch and pay. What you're seeing in particular with this slide is other things that I brought into on competitiveness. I actually brought in Alberta just to look at them, as well as a carbon tax and hydro rates, just to kind of give you an idea, because these factors will drive economic growth, and it's something to watch out for. Now, as I said with this presentation, it gives you an overview of employment, but it also allows you to go ask key questions as you're moving forward, whether that means you're looking at changing a job, or you're the millennials trying to get that next advancement or get entered the workforce. It gives you an idea of what's going on in the market, and that's what I wanted to drive this here, so that you can make informed decisions. You can also ask questions of what government policies are going to benefit you in terms of job creation that will help you further your career. Thank you.